Hi guys, it's your boy Ofentse Ledwaba. Welcome to my YouTube channel once again. If you are a new viewer, please do not forget to like and subscribe and also click the notification bell. As you know guys, I come with valuable information, and today I'm really excited. I'll be showing you guys just the secrets of trading Nasdaq and also knowing how to backtest Nasdaq. Basically, backtesting is about going back in time and seeing what we believe that history always repeats itself, the technical analysis part of forex trading, because what we basically trade, the patterns always repeat themselves. So great chances are that what happened before will definitely happen the next time. So hence that helps us to be able to stay consistent, because we are repeatedly trading the same pattern that's present themselves. So guys, please join me into the charts and get much more valuable information. Make sure you stay up until the end of this video and click the subscribe button if you are new, and also please don't forget to share with your friends and families. Okay guys, welcome to the charts. As you know that the main analysis, the high time frame analysis that we start from is your daily or your weekly time frame. So basically you have to understand that for you to be able to understand the movements that are happening in lower time frames, you have to start with the higher time frames. That is what we call top-down analysis. Start from the top, breaking the market down and going into smaller time frames where you'll be able to take your entries in your 1 hour or 15 minutes. So basically just start with the higher time frame. We're gonna start with daily. So most people, they tend to they draw many lines, some lines which are very much not significant to what they'll be trading. So you just have to understand your strategy and how it works for you. So basically what I trade chart patterns, and I'll be showing you guys just the method of understanding the BF reason how they are very much profitable. So basically we are at daily time frame looking at Nasdaq. We do know and we do see that this was a significant area, you can see. So by virtue, if it's broken, we want to see if the market will tend to break it and then correct to the downside, then continue to the upside. Subsequent to that, what can really happen, because it's the high, and if the high is broken, this is the first scenario, and the second scenario could be this. So hence using chart pattern really assist us, because this can at most happen, you understand? So we just have to understand what are you really trading and how you see the market. What phase are you in? Are you in an impulsive phase? Are you in a corrective phase? You understand? So let's just go into smaller time frame. We realize that we have the highest high broken here, which was the high from the 16th of February, and then we have something significant here. We'll just use this. Okay, so basically you must understand, some people will just say this is a resistance. I call them key zones, because they can be broken and then the market can come back to retest, or can come back below it. I'm gonna go to 4 hour, and then now that is where I'll be drawing my chart patterns using my trend lines. The reason why we took our buy here is because of this. You can see the first touch was here, then the second touch was here. So let me just show you guys. Hit this first touch, first touch, second touch, third touch. Understand? So basically this was the second touch, and then coming here, it was coming to retest for the third touch. You understand? So you have to understand this, that it tends to retest at the lines, and at the 2 points, the minimum that it starts, you will see that the market tends to reject those significant areas. So what we can really expect around this level, this is what I can expect when we touch here for the third time, then we come and retest here, then we push up, further up. So hence I said that this would basically look like an impulse move, but we have to really focus on how it really gets to this third touch, whether it's coming into a corrective manner or it's impulsing further up, because sometimes what can really happen, the market can tend to push, then correct to the downside, then push further up. Then we'll be taking our long positions along this because we are having a correction to the downside. I hope that is clear, because you need to understand what are you really trading. As I've mentioned, look at what is happening here on this line. Understand? The market broke and then now they came to retest it. Understand? So we can look at this level. Our first TP will be here, but you can see it's already almost there. Then the second one will be this one. So you can see we are really having a great move. But you don't need to rush it because it was already moved. We can wait for another retest, because we can have a retest to this level here. You can have the market coming down again. You understand? So you need to be very, very patient. So let's just wait for it since it has already moved. Let's see if we can have this significant retest. Okay. So basically, that's one of the things that I like to show you guys, that you need to understand where the movements are. You need to understand the short movements and also be able to understand whether you are retesting or whether you are correcting to the downside or to the opposite direction, because you must understand that the mere fact of understanding the movements that are happening is you predicting what will really happen, and also using the current data comparing with the previous data. That's how we really focus on the markets. With the technical side, you are able to see what really happens, and also not deviating from the fundamental side. You also put in the fundamental side into perspective. You understand? You have to be aware what is happening. You understand? But what most importantly plays a vital role is our chart analysis, technical analysis on the chart, and also looking at the fundamentals, being aware of what is happening. So what I really showed you guys, you need to see this type of movements. I'll just be doing just a little bit of back testing. Look what happened here. So you can basically see that we are having a pattern, and those patterns, they tend to repeat themselves. Understand? Now I'm on 15 minutes, so you'll see that we'll be having a little bit of more movements. You see? So you will have your buy, and then your stop loss will just be below here. Understand? Okay. And this one, we have first touch, second touch, third touch. 1, 2, 3, and then your pattern. Our will just be this. So your buy will be here, and then the first TP will be here, first target, and then see the second entry was presented here as well, which is a correction, impulse correction, impulse. Okay, so just look at other ones. Again, this one, you can see it presented a very nice similar double bottom, because you must remember the way I see the market here moved in this manner. Understand? We are having, just do this. So you really need to understand what you possibly see here and compare to what you obviously know. So basically at this level, you know that the market should rather come back for the third time, or it can push up coming from here. But for it to push up, this must outline with this, you understand? Hence we are having this. So this basically was a management line. You can see, as you remember, that we always say in an uptrend, you'll have moves, moving like this. It's in an uptrend. You understand? So you can basically see that we had an impulse, then this whole thing now becomes a correction before it broke out of this move. You understand? This whole thing becomes a correction. You understand? But you are able to get those moves before it breaks out of that correction, because of what you already know, that I'm in a correction and this is my bottom. I treat this as a double bottom. You understand? We are having 2 points here. Having 2 points. One. Second one will be this one. Then you know that you can take this at the break of this. Can use this as a form of a pennant. So guys, the most important thing is for you guys to be able to apply risk management, because many people are often right with their analysis, but they get taken out because of the trades they put in or the risk management that they don't put into place. So always learn to understand and also trade for your account size. Don't just be trading and be following someone with a bigger account than you and also putting the same orders, because you're gonna stretch and stress and suppress your account and you're gonna blow. Your account won't be able to withstand those small movements, you understand? Let's say, for instance, you buy, take it here, the lowest point, and then the other one will be. So basically, guys, you just have to understand that the patterns repeat themselves. Look at this. Understand? Sometimes they won't be very much clear. You'll be having some patterns moving in a particular way, which is not realistic. This one is a bit risky, but you can take this one. Okay. So let's say, for instance, you will take your entry. As you can see, gonna push to the upside because we are having this as a correction, and then the previous move was coming from the bottom, which was the impulse. And as you know that we trade with the perspective of impulse, correction, impulse. You understand? So sometimes the corrections are very much flat. Have something like this, or in expanding triangle. You understand? Sometimes you have them in this type of manner. You understand? In a expanding triangles. Okay, hope that is clear. So you can see that here we would have our entry around here, and then our stop loss will be below this low. So you putting in too much trades that are not equivalent to your lot size, you see that these spikes, they are going to kick you out because you don't even need to reach your stop loss, because just a small move of this, if you bought here, just this small move, your account is blown because you've put in maybe 1,000 rands or $100, and then but you're putting 4 orders. You understand? The minute it goes down, you're already in negative 1,000, 1,500, and they kick you out, then they go into your favor. So guys, always be patient and also learn to understand the Nasdaq movements, guys. You will not just gonna get in today and be rich tomorrow. The most important thing is the knowledge, guys. Once you focus on the knowledge, then the money will follow you, because you have to understand the psychological part of trading is that the market takes money from the impatient and takes it to the patient. So many people can analyze, many people can draw setups and all that, but the most important thing they fail at is being patient and also risk management. Those two things are the what makes or breaks a trader. So guys, always make sure. And also guys, thank you for tuning in, guys. Please do not forget to like and subscribe. I'll be sharing much more videos, and also comment below so that you can give me topics of things that you'd like me to talk about, so that I can be able to help you guys and also be able to share my experiences with trading. It's your boy Ofentse Ledwaba. Click our website www.forexheroesfx.com and find out more about us. And if you like to learn directly from me, click the link below and join our community. We offer lifetime learning. The training is very mind-blowing, and also you get to communicate with the rest of the members. So guys, thank you. See you in the next video.